Right, you're still tuned in to Market Pulse right now, picking up the pulse of the day. We have Daniel Effah. He's a Senior Business Development Manager at Puprime Africa. It's great to have you in, Daniel.
Good afternoon. Happy Independence celebrations.
Yeah, happy Independence celebrations to you too. Excuse my manners. Of course, it's a new month, and yes, 1st of October, the celebration. And of course, some investors, a lot of investors, and we here on the show, we're looking back at, the month of September and what happened that month. Yeah. So, I mean, let's get your perspective. What sectors would you say drove the market this month, right? And which would you say were a pullback? Do you have any pointers to sectoral performance, perhaps performers and decliners in the final quarter this month ahead?
Okay, so I think last month was both we could say a very volatile month globally, just not just Nigeria. I think that we had a Black Tuesday last month, and I think a lot of stocks also recovered in the same month. We saw a lot of movement from the financial sector in terms of the banks and some other financial institutions. We saw a lot of movement from the oil sector, which has been like the biggest market in recent times. We also saw a decline in terms of consumer goods, and which is also normal because of the larger macroeconomic conversations that is happening right now. So overall, for investors, you're looking at what would be the conversation for the final quarter of the year. Of course, the fourth quarter usually is just for us in the markets, we look at it for just a 2-month period, which is just what do you call it, October and November, because December most likely everybody's taking profits and all. But going into the final quarter, I think we should still stick to the biggest players, which is the financial sector in terms of expected performance. And now, from what the president's speech around the oil sector, we should also be expecting serious movement and volatility and possible profitability for investors too, basically from that space.
So under the Conos and the likes are expected to see, positive price movements this month and perhaps this quarter. Right.
All right, Daniel. Any perceived catalyst to drive the markets in the month and the quarter ahead? If you look at what has been happening in the fixed income and also the equities market, the fixed income, equities, and currency market, what catalyst do you perceive is going to drive the market edging into the next quarter?
I think the focus has always been, in recent times, has always been whatever the macroeconomic policies that is affecting us right now, which is the high interest rates. High interest rates will keep driving some level of profitability from banks in terms of what they get in returns from loans and all. The interest is higher. We're also expecting crude, for example. We are seeing some a takeover happening. Surplus is being in conversation. So yes, we will still see you get those. And for example, today oil prices have skyrocketed. You get up to $72-3 per barrel. So we are still going to be seeing the usual guys, right? The usual sectoral performance that would lead. You get this. While in the fixed income, I think fixed income is where a lot of people will be tilting towards right now because of the latest interest rate increase, 50 basis points, and it was done. We get close to the end of last month, so this month we will be seeing a potential subscribing into the final quarter. We get investors trying to see how we can take advantage of the 27.5 interest rate increase and the effect it will have on fixed income, treasury bills, bonds, and also I think that our economic tightening approach will take the center stage in terms of which sectors and which opportunities investors will be looking out for going into the end of the year.
Yeah, indeed. And unfortunately, some investors were looking forward to more equities market getting more attention, but it looks like fixed income just might take the shine again going forward. So, I mean, let's comment. Obviously, you highlighted the banking, sector. They're also, from what you're saying, going to be the leaders, in this quarter, this month as well. But we're seeing, obviously, the release of H1 results. So, UBA, they recently, latest, I think it was yesterday, they released their H1 results, United Bank of Africa half-year results. We're seeing impressive profits position, and it's driven by the 614.4 billion naira in net interest income. That's like 395% increase from the same period last year. So what does this suggest about the quality, right, of its half-year profits?
Yeah, I think that I say it everywhere. I think we have one of the most robust financial sectors in Africa, and I think that the beauty about our financial sector is the level of resilience. We have one of the strongest banks, and UBA reflected that. Even though we know that this is what happens whenever there is a there is a high level of interest rate increase, like we've done over 800 basis points, right? So it will definitely have an effect on the overall business operations. Should profit be higher? Yes, because of the whole windfall tax conversation. But I think that this earnings is tilting us towards the right direction in terms of our financial stability, right? In 2 years' time, we're looking at capitalization and all. So UBA just reflected the fact that the top banks in Nigeria are doing well, right? They reflected the fact that we are seeing a considerable level of resilience, and this will further push investors to still keep pushing positive sentiment towards the growth of that sector. That was a fantastic result from UBA, and so the only risk in the nearest future then is the fact that if interest rates policy in terms of tightening continues, would they be able to manage the risk? Of course, I think the GMD talked about that in terms of yes, the risk has been pushed up to about 5% or thereabouts, just to be able to cater for potential risk that will come from interest rate increase. But overall, I think it's fantastic.
Yeah, we're looking forward to easing of interest rates or holding of rates, hopefully going forward, right? Right.
So if you look at, on the other hand, you look at pre-tax profits in the second quarter of the year, it printed 245.2 billion naira. It's down by 28% when compared to the same period in 2023. What do you make of this?
I think it's obvious. Unlike last year, a lot of conversations. We had a lot of dollar-backed conversations, right? So that is just the difference, right? Because now banks are now required to declare windfall taxes. So you then have to get that anything related to the dollar in terms of your activities. So that is why we're having that. It is not a function of any decline in performance of any kind. In fact, I think that this is even better in terms of what the risk exposure, right, that banks have been faced due to the level of tightening, right? So it is still a good figure again in relevance to the fact that the CRR has increased, right? Now banks can meet up with the LDR because of the increase in CRR. So there's the funds to play with is not as much as it was again a year ago, 2 years ago, when our interest rates were very, very low and our LDR was around 50%. So you can't really fault the figures because it is only a cause and effect, and I think that is basically what it is. For investors, you are more focused about the fact that yes, is the bank still resilient, right? Is the bank still having the potentials to earn more, right, based on the level of business you've seen so far? And I think it shows that in terms of the figures, yeah. That is not good, but I think overall you will see that it is a good pointer to quality business, yeah.
All right. Now let's look at the bank comparatively, right? How would you rank United Bank of Africa's performance in comparison to its Fuga's peers, right? Is it proving to be competitive enough to investors, considering they still have their 500 billion recapitalization plan that they've laid out but are yet to commence? So, I mean, how would you rank them competitively in comparison to, their peers?
I think that in overall comparison, you would say that like a big shout out to the Fugas in terms of the way they've they maintain level of consistency and comparative competitiveness, right? And I think UBA is really pushing that in terms of it's the way it differentiates its business, and it's for investors like me that wants to see what to look for in terms of opportunity in the market. I would say yes, right? I would say yes, they are doing very well, right? And I think that what this kind of competitiveness will do is that it will further push the level of quality of the remaining members of the Fugas community to do more, right? So it is a good one, and it's very good for the bank, basically.
All right, let's shift gears a little bit and tilt towards what is happening regarding flour mills. What is your take about flour mills, knowing fully well that they're looking at raising nothing less than 200 billion naira from the market? It's quite a tough one, a tall order at this point in time. What's your take about that?
I think that a lot of what will come from flour mills would not be Nigerian, would not be local-based funds in terms of where to get funds from, right? Because it was the plan of the company based on what was said in terms of the press briefings and all is that yes, they've done their best. They've done their best in terms of vertical growth, right? In terms of domination in the Nigerian market, but they want to push outside of Africa, and that is a fantastic pointer because a lot of companies in part of the world, in terms of African companies, are looking towards what will happen in the nearest future, 2025, 2026, in terms of the AFCTA future agreement that would be most likely become more ratified as we go on. So it is important to position yourself as not just a local champion in quotes, in terms and looking at the regional sectors, the subcontinent, and the entire continent as a whole. So what Flour Mills is doing, it is fantastic because at the end of the day, what we want is stronger companies, bigger companies that can perform better and can also yield a whole lot for investors and the entire capital market as a whole.
Okay, I mean, we look forward to seeing that happen right here. Thank you once again for joining us, Daniel, from Puprime Africa. I hope to have you in some other time. Enjoy the rest of your holiday.